Oh man, Lucid is getting smashed. So Lucid was down up to 15% in pre-market, and my shares are not doing so well. They're super red right now. So let's take a quick look. We're currently down quite a bit off our highs here. So we were before the open, we were just under the 20 mark. We had a bad month, but we were hanging in there with the 20 marks, the key psychological area. But then it just dropped. We reached a low here of $15-ish, and we've had a good bounce there, although we're fighting around here on the EMA ribbon in the minute chart. Now, let's explain what actually happened. Why is Lucid falling? Now, the reason behind Lucid falling is when you have a SPAC, and in this case it was CCIV, there's a bunch of private pipe investors. Now, in the case of LCID CCIV, this was the biggest in the history of SPACs. There was a pipe investment of $2.5 billion because there was just that much interest. Now, normally your pipe investors will have a lock-in period. And in this case, Lucid agreed an 18-month lockup period, and pipe investors can exit or sell their shares on the 1st of September, which is today. So it's got a lot of investors worried about, are these pipe investors going to dump their shares? Are they going to exit and take a profit? And therefore we've seen this fall here. But we don't know, is this actually pipe investors dumping their shares, or is this a self-fulfilling prophecy where retail traders are actually believing that's the case and therefore dumping their shares in a fright, hoping to buy it back down lower? Now, a few points worthy of note is normally with a pipe. Now, in this case, the pipe investors are one of the biggest ones are Public Investment Fund of Saudi Arabia. You've got then funds managed by Fidelity, BlackRock, and a few other Wall Street names. Now, normally they will come in at $10. That's your SPAC entry price. Whereas because there was so much euphoria around CCIV and Lucid at the time, if you remember, it ran up to $60. They came in at a 50% premium. So the pipe investors bought in at $15, and that probably explains why you're seeing the floor here on the chart sitting at $15, and we're bouncing off that level as we speak. Now, what isn't clear is why would some of these funds sell? So for the smaller ones like Fidelity, BlackRock, who have a certain interest, maybe they want to cash in a profit. I mean, but how much are they really gaining here? They came in at 15. They're going to be selling here, let's say, at the max 20. Is that enough for their return and the risk they took? Arguably, a 30% return, they could argue, is enough, but surely they're in this for a bit more of a long run, particularly the Public Investment Fund of Saudi Arabia, who holds the majority and is the biggest shareholder. We know from a government perspective, Saudi Arabia have a key strategic relationship with electrical vehicles and an interest with that. We also know Lucid are looking to build a factory, which would be the first EV factory in Saudi Arabia. So it doesn't seem to align that for a 30% return, the Public Investment Fund of Saudi Arabia would be dumping their shares here. So I went ahead and bought the dip a bit more here when it fell to its bottom. I managed to get in at between 15 and 16 with a few different buys. And it's good to see us bouncing back. But look, at the end of the day, we know the game with Lucid. It's a high risk, high reward play. The valuation is very high. The valuation got very high, and now it's kind of a bit more sensible at the 15 par value mark. But ultimately, Lucid will run if they can sort their deliveries out. We saw what happened with Lordstown. We saw what happened with Nikola. This all comes down to deliveries. And if Lucid can figure out their deliveries, this will go higher. I mean, we already saw that we were getting up to the 28, 29 mark, hit a resistance a few times there, and it's just been hovering around 20, 22, 23. Now, it all comes down to them delivering their vehicles. We saw they did a test drive of two of their Dream Editions in the States. It boasts better range than the Tesla. They look fantastic. They're higher price point. There's a lot going for Lucid, but at the end of the day, they will not justify their valuation until they start delivering vehicles. And yes, whilst on paper, the share price is super high valued, in terms of the EV space, which is just commanding super high valuations at this point, it's not super far-fetched. So there you go, guys. There's an update on why Lucid is down so badly, almost 10% today here in the market, although we're getting a really good bounce here. So we saw we gapped in pre-market, opened up here around the 18 mark, now fighting our way back to 18. We're just 17.98 right now. So we can just see here, we bounce here off the EMA ribbon, and hopefully it can head higher from here. If you're a long-term investor, not financial advice, but it's a good opportunity to buy the dip if you believe in Lucid, if you believe in their business model, and you fundamentally believe they're going to be delivering vehicles. We know, there's a various Chinese EV competitors. We know Rivian are looking to IPO as well, backed by Amazon. It's a hot space, heavily invested space, high valuations, high risk, and ultimately it's only really Tesla and maybe a bit of NIO and XPeng who have proven that they can deliver vehicles. So still uncharted territory for Lucid, but still one I'm holding in, even though my shares are super red right now. So there you go, guys. We'll see you in the next one.